Let's bring in Chief Market Strategist at TD Ameritrade, JJ Kinahan. JJ, good to see you as always. We'll get to some of your latest monthly survey data in a moment, but first, a bigger picture question on the markets. Clearly, we were seeing a pullback in tech and a rotation into value over the last couple of sessions. Have we seen how hard it will be in the last half an hour for that to keep all of the indices propped up when you're not having tech performing?
Yeah, I think, for us to continue to go higher, you need one of the, big 5 or 6 stocks, so to speak, particularly, mostly the FANG stocks to perform. And with all of them having a tough day, it makes this really difficult because let's face it, in maybe more normal times, you could say, well, financials could pick up a lot of the slack. But when you're talking about 60 basis point, 10 years, no matter how good they're doing, they're facing a giant headwind, and this being the second largest, sector in the S&P, it's just really hard to perform when you can't say that they're going to have great days day after day because they're going up against the biggest headwind that they can in terms of how they make money. So when you have times where tech struggles a little bit, financials, I don't think people can count on quite as much until we get an opportunity for those to get going. I just think it's really hard for us to continue with momentum higher.
So retail investor enthusiasm has been a huge story over the past few months, JJ. Where does that stand right now? Has it cooled off a bit?
Well, Sarah, the volumes and the overall market are down a bit. Still pretty incredible overall in terms of retail volumes. The last couple of weeks, maybe not as great. I think it's due to a few different things. Number one, a lot of times as volatility increases, people will come into the market. There's more opportunity intraday, et cetera, and even longer term if stock prices decrease. Number two, as we near these all-time highs, I think people have a little bit of the fear factor of have we gone too far? And let's face it, a little bit of it may be timing in terms of the summer. Even though it's been the strangest summer, I think, of all of our lives, people may not be flying to Europe or whatever, but I do still think people try and take some time off before their kids go back to school in whatever form their kids are going back to school in the next couple of weeks. So I think that also has a little bit to do with the fact that the market has slowed down here a little bit, and in fact, overall volume has slowed down. But if you look at what's going on with the retail traders over the last few months, we still see a lot of momentum of people caring about the market.
JJ, on that point, one of the things that stood out from your monthly survey data you share with us is that millennials are buying Wells Fargo.
Yeah, I have to be honest, Wolf. When you look at the stocks that our clients bought, you see the Microsoft, the Apple, it makes sense. And then you look at what millennials did different from I'll call them traditional investors. And I see millennials buying Wells Fargo. It's a little bit tough to figure. The thing that stands out to me on that is, A, they do have some faith in the financials coming back longer term. B, it is a stock that people can participate in that have smaller accounts. One of the problems with the market maybe overall, and, I applaud Apple for cutting their stock price so the average investor can hopefully participate in it a little bit more. Wells Fargo is in terms of pure dollars, more affordable stock and a way for people to participate in the financial markets. And, the stigma perhaps that followed Wells Fargo over the last couple of years maybe just isn't as strong with millennials because many of them weren't as exposed to it as some of us who are a bit older were over the last couple of years.
What are some other names that stood out to you that some of your clients were buying into in the past few weeks?
Well, Sarah, on the buy side, I think that it's interesting. Pfizer was actually the #1 traded stock 2 weeks of July. And the reason being, of course, as we look for COVID-19 inoculation or whatever it may be, we had the news out of Russia, obviously, this morning. That's helped the market overall. So I think people are looking for the solution there, no doubt about it. A little bit on the millennial question that Wolf just asked, on the sell side, Sarah, we had our clients be sellers of Twitter. They were buyers a few months ago, sellers, in July. And what I find interesting about that, it was not a name that our millennial clients sold, but actually our more traditional clients sold. So I think that that's very interesting. And then Roku was sold pretty much across the board. It was the #1 sell in the month of July. Again, maybe a little bit of the back to work or whatever, or the homebody trade not being quite as strong. And Disney was also a sell among our millennial clients with the rally that it had. So I find those ones to be particularly interesting overall, and the differences between some of the things that millennials see as compared to some of the things, again, that our more traditional clients are looking at overall. And then the last thing I find very interesting is that if I look at our millennial clients versus traditional clients, the millennial clients have continued to be much more bullish over the last few months. And in fact, it's the greatest gap we've seen in 2 years in terms of how bullish millennial clients are on the market overall as compared to our traditional clients.